Good day. Welcome to our lesson today. I am Naomi Kinkela and I am your financial accounting lecturer, and I'll be taking you through FAC 3704 this semester. All right, it's going to be interesting. It's going to be interesting. Right, so I work for Noble Tutors, and Noble Tutors is a private tutorial center, and we believe in unveiling the natural intelligence in you. Okay, so we believe every single person has some intelligence in them, provided we teach them in the right way. We find that which is struggling to them and we come with a solution. So we are problem solvers. All right, so welcome to the lesson. It's going to be interesting. All right, so I'm going to take you through FAC 3704. So I'm just going to give you an introduction of what FAC 3704 is all about. As you can see, FAC 3704, this is group's financial statements. All right, so we're going to start there. We're dealing with group's financial statements. Okay. We're dealing with group's financial statements. So I'm seeing the word group and I'm seeing financial reporting, actually basically group's financial reporting. I'm seeing financial reporting, which we are familiar with. We've done that in our second year financial accounting, where we did our statements, notes and all that. In our first year, second year accounting. And now I'm seeing the word group. This is strange, isn't it? We haven't seen group, right? This is strange to us. So it is a new concept, but it's not so new. This concept was introduced when you did FAC 2602. So 3704 is basically just a continuation and it's much more extended as compared to the second year financial accounting FAC 2602. All right. So today, in today's lesson, I'll be dealing with three elements. All right. First thing, I'll be dealing with business combination. Business combination. Okay, this is the starting point of where this group financial reporting actually come from. All right, then I'm going to take you through consolidation. Consolidation of groups financial statements. And no, I'm not talking about reporting in here. I'm talking about financial statements. All right. Financial statements. Right. And then finally, I'm going to talk about other investments which could form part of the group. Right, the group that we're talking about here, other investments that could form part of the group. All right, so let's go right away into it. Boom. Business combination. So what do I mean by business combination? Before I even go there, okay, when you're looking at your standards, these are basically where you can find these particular topics that I want to talk about. All right, so as you can see, business combination can be found in AFRES 3. So in your standards, you can find business combination in AFRES 3. Okay, and then consolidated financial statements can be found in AFRES 10. Okay, you can find this in AFRES 10. And then the other standards that are showing here, these are the other investments that I'm talking about. All right, so these are the other investments I'm talking about on my point 3. These are where you can find all of them in the standards. Other investments. Okay, hope you're still with me. All right, so let us go deep into our business combination. So point number 1, business combination. And we're going to go deep and try to understand what exactly do we mean by business combination. All right, how does this start? Okay, so I'm going to make an example, right? So I've got company A and I have company B. So what happens? Okay, company A buys some shares, in other words, some interest in company B. Okay, for example, Company A purchases 60% shares in company B. Okay, so by purchasing 60, so they've got interest in this company. And they've got more than 50% interest. All right, so because they have more than 50% interest, this gives them control over company B. Okay, and when you have control, when one company has control over another company, this company is known as the parent company, or rather the investor. Okay, so it's referred to as a parent, and then company B becomes the subsidiary of company A. So that is the subsidiary company, and company A is the parent company to company B. All right, so what I've shown you right now, this is just a simple group. This is referred to as a simple group. Okay, like I was saying in the beginning of the lesson, this is an introduction, what we did in second year, FAC 3602. So we just dealt with a simple group, all right? But it's going to get complex now. In FAC 3704, we are getting complex, all right? I hope we're still best friends. I hope we're still together. All right, let's go on. All right, so we say the first group is a simple group, right? One parent, one subsidiary, right? It doesn't end this way. It comes in three other ways, okay? We've got three other groups that we can have, all right? I'm going to start with the groups right away. Okay, so the first option, or rather the first group is now, I'm going to start with this one. So company A has shares, or rather interest, in company B. Then company B has shares or interest in company C. Okay, so I'm going to make examples, all right, and I want you to really pay attention to this one so you don't miss it. Okay, so company A has 80%. 80% in company B. And then company B has 60% in company A. Pay attention. All right. So you see what's happening here. Company A is a parent of company B. Okay. So the group, if you look at the group from the top, company A will be the parent, and company B is the subsidiary. All right. So just shortcut it. And then company C becomes a subsidiary. Right, do we see that? Okay. Company A has a direct relationship. It has a direct relation with company B, while company B has, while company A, going back to company A has indirect relationship with company C. Indirect relation. What do I mean by indirect relation? What do I mean by that? Company A buys 80% in company B. That means in every profit that company B makes, company A will get 80% because they are parenting company B. All right. Then company B then goes and buys 60% shares in company C. So in other words, in every profit that company C makes, company B gets 60% of that. But remember, company B must share their profit with company A. So they will give 80%. So I just want to talk a bit on company B. I want to use a different color. So here's company B. Company B must give 80% of their profits to company A. Right. Plus, if they're receiving this 60%, they must also give 80% of that 60%. Because this 60% is a profit that they received in subsidiary as well. So in other words, 80 times 60 gives me 48%. Okay, so from a direct relationship, company A gets 80%. From an indirect relationship, Company A gets 48% because it gets 80% of the 60% that they are receiving in the subsidiary. Okay, so this kind of group is known as vertical group. This kind of group is known as a vertical group. This is referred to as vertical group. Okay. Okay, a vertical group because it is going down. All right. And I want you to remember this when we now go into consolidation. Consolidation starts here from the bottom. Okay, I'm just gonna write NB. Remember, consolidation starts at the bottom. At the bottom and goes up. Okay, all right, so that's basically the idea. All right, so consolidation will start at the bottom and then further goes up goes to the top. So that's so far we had a simple group where we just had one company buying another, right? Then we moved to a vertical group where one company is a parent of another company and the subsidiary is a parent of another company. Guys, it can be really complex. Okay, these can go on and on and on. All right, so that was, let me just label them. That was a simple group, and then this is a complex. So what I'm going to explain now are complex groups. Okay, simple group, complex group. The first complex group that we have is a vertical group. All right, I hope you understand. Please remember, you can always come back to the video again and watch it over, watch it and watch it again until you understand it. All right, so that was vertical group. Now I'm going to show you the other group that we could have as a complex group. This is horizontal group. Okay, so how does horizontal group work? Okay, so I've got company A. I've got company A. Company A purchases interest in company B, then purchases interest in company C, then purchases interest in company D, and so forth and so forth. Guys, remember, it can be really complex. If you look at this in practical, most of these companies, these groups are really huge. All right, so when one parent, so in other words, in this one we have one parent and all of them are direct subsidiaries. Okay, so there is no indirect relationship here. They're all direct subsidiary. All right, unlike having a sub-subsidiary, here we've got direct subsidiaries. Okay, this is known as horizontal group. If you look at even the format, if you look at the structure, it shows you that this is an horizontal group. Okay, I hope we're still good. All right, so I'm just going to give an example of like what we can all relate into. As we all know, Facebook purchases quite a lot of other social media, right? So, for example, Facebook company saw that, okay, I see WhatsApp is really running and I see most of my people are running away from Facebook and joining WhatsApp. So what am I going to do to keep being the leader of the industry? What am I going to do? All right, so what they decided to do is purchase WhatsApp. So they went on and purchased WhatsApp. All right, then they also saw that this Instagram and people are enjoying, posting pictures and videos and all that, and people are running away from Facebook and running to Instagram. So what are we going to do? We still want to be the leader of the industry. What are we going to do? They went on and purchased Instagram. All right, okay, I don't know about Twitter, but I'm just going to make an example as though Facebook has also purchased Twitter. So the reason why I'm bringing this company is just want to make it practical, okay, so you can all relate, right? Now look at it. Although Facebook has purchased WhatsApp, Instagram, and Twitter, but Facebook is still running as Facebook separately. WhatsApp is still running as WhatsApp, and Instagram and Twitter are still running as they were running. Okay, so it doesn't mean that now because Facebook has purchased WhatsApp, Instagram, and Twitter that they're gonna just change the operation. No, they're not gonna change the operation. They're just now in control. They are now the one in control, controlling all these companies, but the companies are still running separately. So what happens is these companies will have their own separate financial statement, and at the end they will then consolidate. So I'm going to go into consolidation from here, right? I'm just introducing consolidation. I've explained to you the business combinations that we could have, and I'm telling you now about consolidation. What they do is they consolidate only the financial statement. Hence, we say this is group's financial reporting. It's only on the reporting at year end that you're going to take the financial statement of WhatsApp, financial statement of Instagram, financial statement of Twitter, and financial statement of Facebook, and then combine them by consolidating to make it as though it is one financial statement. Okay, I hope you're together with me, right? Now, I mentioned something about control. I mentioned something about control when I was talking about simple group. Let's go back there. I spoke about control, right? And I did say I talked about having 50% or more. Okay. I just wanted to emphasize it doesn't always have to be having 50% shares or more. Number one, remember a majority shareholder doesn't have to have 50% or more. Just they should have the highest shares. Okay. But that's besides the point. Another reason, there are many reasons that can give you control, and I want to take you through. This one is in your study guide. In your study guide, page 9, right? It talks about the elements that one company needs to have control over another company. Okay, so 3 elements. You need to have power, right? Power over the investee. So I should have power over the investee, all right? Now, to get power, what do I need? So they went further to explain what is this power we're talking about. How does one company, have power over another company? All right. It says an investor has power over an investee when it has to have existing rights. Just want to use a highlighter, different color. All right. So it needs to have existing rights. Okay. Existing right that give it the current ability. So this existing right will give it current ability. Current ability to do what? To direct. So ability to direct relevant activities of the investee. So to have power, I would have to have some rights, some existing rights, because I'll obviously come and buy shares and interest. So I've got existing rights, and those rights gives me the current ability, as in like now, I've got the ability now to direct the relevant activities of the investee. So before they go into major projects or anything like that, I have to take part of the decision, right? So that is power. That's the first thing I have that would say, the first element that will say that I've got control in a particular company, right? So the first thing is to have power over the investee, and they explained the elements that gives you power, right? Then going back to control again, second element is I need to have exposure or rights to variable returns through its relationship with investee. Okay, I need to have exposure. I need to be aware of all the variable returns of the investee. In other words, a subsidiary company. Okay, remember, number one, I'm going back again. I will keep going back. So it's power. I need to have power over the investee. Then I need to have exposure or the rights to their variable returns. Okay, that's the second point. Then lastly, now I need to have the ability to use my power. So I've got power, but I must be able to use my power, right? So I need to have the ability to use its power over the investee to affect. I'm using my power to affect the amount of returns to which it is exposed. All right. Okay. Now, if all these 3 are met, then I could say I've got control. So are we together? It doesn't have to be automatically that because I've got 50%. I could have less than 50%, but have control if all these three elements are met. Please remember these. These are normally examined on multiple choice questions or even just theory questions or discussion type of question where they can ask you to explain or discuss when can one company have control over the other company, right? So remember these for theory or rather discussion questions. Okay, you can remember this for discussion question, or you could also remember this for multiple choice question. Okay, all right. So now that we are there, so far we managed to do our business combination is done. Now I'm going to consolidation of financial statement. All right. So I'm going to the second elements of today. Consolidation of group's financial statements All right, guys, this is just on an introduction level. All right, I'm going to go deep into consolidation. In fact, consolidation is FAC3704. That's what we do most, okay? I'm going to go deep into it, but for now, I just want to introduce consolidation. All right, so before we talk about consolidation, I want to remind us of the statements that we normally have in financial reporting. The statements that we normally report in are as follows. Number one, statement of profit and loss and other comprehensive income. I'm just gonna shortcuts. Then 2, statement of changes in equity. 3, statement of financial position. And 4, statement of cash flow. Okay, but we don't do cash flow here. Statement of cash flow. Statement of cash flow in this level, it is not examined. All right. So what do we do in consolidation? We take the statement, these 3 statements of all companies in the group, and combine them. All right. So we combine them to report, or rather to report in one financial statement. To report in one financial statement. So basically, consolidation we could also even call this as combining. So that's basically what consolidation is. Okay, this was just an introduction, guys. Like I said, consolidation is really what we're going to be doing. So I'm not going to rush it. We're going to have to take it step by step. But now that you have an idea of what we mean by this consolidation, right? So what you need to know, you need to have good knowledge of your statements, because they're not going to teach you statement right now. Okay, but what we're doing is we have a statement that are already done. Remember, the companies are reporting separately, right? Then we're combining together. Okay, so that's what we do in consolidation. Okay, so that was the second one on the introduction level. So that is done as well. Then other investments, these ones as well will be dealt with in detail on a separate class. All right, but I just want to take you through what I mean by other investments that we could have in groups. All right, so subsidiary, this was already dealt with. Okay, this we have dealt with it. That is what we were talking about there by business combination, right? Then we could have associates. So we come, 2 companies are now having some significant influence. To know that I have an associate, okay? Associate, I have significant influence. Not control, but significant influence, important influence over the decision of the company. All right, that is associate. Okay, so associate is known by the significant influence. Right. Okay, another investment we could have is in joint arrangements. All right, we could also have joint arrangement, and joint arrangement are divided into two. Okay, we've got joint venture, and we've got joint operation. All right, what is a joint arrangement? Joint arrangement is when companies join forces to create another. Okay, guys, I'm introducing it, right? So here it is when companies join forces. So they join forces to create another company. To create another, okay, this is new, right? Company. All right. Why? Because maybe they want to bid for a tender or a big project worth millions, billions, all right? And they need the knowledge of one company and other knowledge so they can basically win the contract or get the tender that they're looking for. All right. For example, if we need a engineering company and we need to go and get a tender, all right, we will need the engineering company, but we also need IT. Okay, so if company A is specialist in IT, while company B is specialist in maybe plans and construction and stuff, we can join together and create one company that gives us force. And when we go for this tender, we're definitely winning it. Okay, so that is joint arrangement. And then the arrangement can then be split into two. Remember what I said, eh? We've got joint venture and we've got joint operation. Joint venture, here we are sharing the equity. So basically we share the equity of the company, and then joint operation we share in assets, liabilities, income, and expenses. So in all of that, we're sharing in the percentage that we have put in. If it's on 60-40, we share 60-40. If it's on 50-50, we share 50-50. And then I'm going to now, when we do consolidation topic, I'll show you how joint arrangements then kicks in consolidation. All right. And we're going to do more on that. I just want you to keep in mind, this is just keeping in mind, right, guys? Keep in mind, for associates and for joint venture, these two, we use what is known as equity methods. We use equity method for both of them. Reason being, it's the same treatment because we are sharing in the equity rather than net assets. Please remember this. We're going to have a topic. We'll deal with this in a separate class. But for today, I just wanted to introduce you, give you an idea of what we'll be dealing with. All right. So basically, this is more or less 90 or 80%, or rather 80% of what we'll be dealing with in FAC 3704, Group's Financial Reporting. However, we're going to deal with them in details, okay? But this was just to sum up 80% of what we'll be dealing with in FAC 3704. Okay, thank you so much for this class. I hope it was helpful. Do not hesitate. The next class will be coming your way soon. Keep following with us. Keep studying. I'll be giving you tips. Write down the tips. Guys, remember, it is a recording, so you can watch it over and over and over again. Thank you so much. It was lovely to have you. See you next time.